European stocks continue to be one of the best performers on the globe this year. The German DAX is up 20%, while the S&P is flat. And our next guest says lower oil prices and room for more stimulus could continue to boost their outperformance. But as the president warns Vladimir Putin that the Russian leader is playing with fire, Senators Graham and Blumenthal have proposed a bill that would impose 500% tariffs on any country buying Russia's energy products. So if the situation with Russia escalates further from here, could Europe's soaring stock markets be at risk? Let's ask Tim Seymour. He's Seymour Asset Management CIO and a CNBC contributor. Tim, right now the market's certainly not connecting those dots. Welcome.
Hey, Kelly. Yeah, great to be here. No, they're not. I think the worst of the Russia-Ukraine energy impact on Germany, Western Europe, is already priced in. If anything, we've seen Russian energy exports over the last we're at 3-month highs. If you were expecting a Russia-Ukraine truce that was going to allow oil to start flowing freely, even though some argue it is still flowing out, then I think these are bad headlines. I think the reality is that Germany has already figured out that energy infrastructure is part of where they're going to spend, and that historic, recent announcement that there would be deficit spending both on rearming Germany, rearming Europe. I think energy infrastructure, nuclear. These are part of the reasons why you want to own Europe, why you want to own Germany, lower energy costs overall. And again, this is OPEC that's telling us today they're going to increase another output and announce another output hike in July. This is after June expected and where we are with oil prices. This is very positive for the European economy.
So is it that you think they've found a way to diversify their energy supply away from Russia, or that simply it's unlikely that we see the same kind of escalation we saw a couple of years ago?
Much in the way the world has changed in the last 6 to 9 months around NATO and some of, I think Germany also after Russia, Ukraine had to scramble with their nuclear program. So nothing has changed dramatically in the last month or 2 months or 6 months. But I do think that if anything, we have lower net energy prices. Germany's got a friend in the White House, at least in the form of a U.S. president, that really wants lower energy prices. And the deals and the chummy nature of the Middle East relations right now is everything to do with cooperation on energy prices. That also helps Germany. So I'm less worried about Russia-Ukraine headlines as it relates to Germany. I think that's, those are, look, I care about those headlines for the world. I care about those headlines for Europe and for global safety. But I don't think that's an impediment to investing in Europe here.